What's up, YouTube? This is Dave, and I trade stocks. Let's go. All right, everyone, welcome. This is my inaugural video. I'm a little nervous, I'm not gonna lie, and let's have some fun and let's talk stocks. So it's the end of 2025, and I want to really start to think about 2026, right? And what does my portfolio look like in 2026? To get there, we need to then think, what is the economy going to look like in 2026, right? Now, while no one has a crystal ball, we do have indicators. Some contradict each other, right, which makes it harder. And there's a lot of dynamic factors. I think for me, I'm looking at it as my base case is flat to slightly lower employment with stabilizing price action for the consumer. And I think housing will start to fall. I think housing prices are going to come down. I think we have got to a point where it is so unaffordable for the average person. And the 50-year mortgage just isn't a solution. It just isn't. You know, to be paying for something until you're dead, I mean, and then leaving it for your children in some situations, it's just not the right solution. So my thought process is the economy going to be booming? No, it's not. Now, I'm very supportive of what's going on. I think I like the tariffs, believe it or not. I love the tariffs, actually. I love the action in Venezuela. We need to do something about that. It also stabilizes that part of the continent, right, which is important. And they feed into terrorist groups and all that, so that's important to deal with. So I support that. And I support a lot of the policies. I do think interest rates need to stabilize at the minimum, if not come down. But I do think you could see something where if interest rates came too low, prices would start to accelerate again. So we have to be careful with that, right? That's a double-edged sword. You want to see growth without price expansion, right? And I think that's going to be very challenging. So I'm looking at fairly defensive stocks right now for 2026. I want to be invested. I want to be in the market. But I want to be in high quality that is trading relatively cheap to historic norms, that pays a dividend, that, you know, if it went down 10 or 15%, I'm not going to lose my shirt type of thing, you know what I mean? But long term, I know is worth a lot more than what I'm buying it for. And this is setting up another video where we can talk about, you know, entry strategies into these assets. But for right now, I want to talk about one stock that I really love for 2026. This is one of my top 5 stocks of 2026. And there is numerous reasons why. And that stock, CMC SA, Comcast Corporation. Full disclosure, I do have a position in this. I'm a believer. My cost basis is around $27. A low 27s, high 26s. And as of today's video, it's trading in the 29s. I think full value is somewhere in probably the 50 range. I think if you look at historical norms, you know, the stock trades at about a 16 times earnings on a forward basis. I mean, it's trading at about 6, well, with the price hike, let's see. I mean, I'm seeing a PE ratio of 4.84. Now, I didn't calculate that. That's what Perplexity is showing me. But I was going to say it's about 6. So it's close. So whether it's 4, 5, 6, it's somewhere in that range. So let's say it's 6. So if it's trading at 6 times earnings, right, has a great balance sheet, has good leadership, has already seen a lot of the headwinds play out. The people that have switched from cable to streaming have most likely already done so. Okay? This isn't a new phenomenon. We've been talking about this for 5 years, you know what I mean, longer. So you're seeing a lot of those headwinds kind of play out, and they have played out, which I think is a catalyst. I also think they're making a lot of gains in the high speed internet, in the high speed broadband game. I think end of 26 you'll start to see subscriber growth on the broadband side again. I think it pays, well, I know it pays a 4.4% dividend just to hold it. You look at a lot of these high yield savings accounts and stuff, I mean, it's right there with it, plus you get the upside benefit, okay? I mean, you know, EPS above about $6 a share. Now, we just value this the simplest way possible. If you put a 10 multiple on the EPS, you're at $60 a share. Okay? I'm looking at 29, 25 right now. I was able to get in at about 27. To me, that's a home run. Especially in an economy that I think is going to stagnate more than grow. I'm not saying we're going to see a recession, but I think we're going to be in a stagnant kind of things are going to stabilize, let's call it. And I think that's an okay thing. Pricing can't keep going up forever, and the wages have not went up to the same extent. I mean, you're seeing people even in the mid 6-figure salary ranges that are, you know, struggling to some extent. I mean, if people at that pay scale are struggling, then what's happening to the guy making 60 grand a year or 40 grand a year? That guy is getting, or girl is getting just crushed, right? So we need price stability. But we can get price stability without a full-blown recession. And I think you're seeing that. You know, the other big thing is, not to get off course here, but I think the tariffs have done great things. It's forcing companies to bring jobs back into America. It's going to create competition for jobs and people. People are going to have a choice of where they want to work. Now, it's going to be manufacturing jobs. It's going to be administration jobs. Some of them will be corporate jobs, and that's all great. They're all good jobs. I mean, if you're making $50,000 a year now, and someone says, I'm going to pay you $65,000 a year now, that is a tangible increase to your quality of life. If you're making $100,000 a year now, and now someone says you're going to make $120,000, I'll pay you $120,000, that is a tangible increase to your quality of life, okay, which is good for everyone. So I got a little off track there, but at the end of the day, I don't think we're in some boom cycle by any stretch. I think we need a year or two of this neutrality, potentially even a little pullback, to then grow again, okay? And I think one of those stocks, one of my top 5 for 26 to do this with, is CMCSA. It's cheap. And as you've seen the last couple days, today is the 16th of December, over the last couple days of trading days, I should say, you've kind of seen the market hasn't done much, right? It's been a little down. It's been, fairly flat. But CMCSA is up 5%. You're seeing this because people are now cycling from growth to cheap. And I will always buy a great asset that's cheap. In any market, a great asset that's cheap will be a great investment in any market. It's especially great if you're in a down market or a flat market, because all the big money has to go somewhere. If it's not going into NVIDIA in the triple Qs in private equity, it's going to go to stocks like CMCSA. All right, so about 6 times forward earnings, 4.5% dividend roughly, great balance sheet, ton of cash, ton of revenue generation. You're going to see subscriber growth again, a lot of CapEx, possibly a merger or two coming. CMCSA is my play. Now, is it the right play for you? Only you can answer that. Talk to someone you trust about it that is educated in this. Don't take my word for it. But on the simplest basis possible, if you're looking at a stock that's trading at 6 times earnings, that normally trades at 16 times earnings, with EPS growth, or at least flat EPS, if not growth, and a lot of good stories, and I think a lot of the bad stories are already played out or mostly played out. This stock at the minimum, like if I'm totally wrong, this stock is a $35 stock. If I'm totally wrong, this is a $35 stock. If I'm mostly right, I think it's a $48 to $52 stock. And if it plays out exactly as I think, it's probably a $60 stock. Now, I'm not promising you anything here. This is speculation. This is education. But that's how I'm looking at this. And I'm saying, okay, my floor is 35. I bought it at 27. That's a good win in kind of a stagnant market. So that's how I'm seeing things. This is episode 1 of Dave Trades Stocks. I'm really excited, guys. I had fun making this, actually. I was nervous to start. So you'll see more of these to come. I'll make videos on my other 4 top stocks for 26. And the goal of this channel is to talk about stocks, investing, markets, and I think it's going to kind of morph into current events as well. Because I think current events play big roles on markets, right? So this channel is going to be a few different things, but it's mostly going to be stocks, investing, markets, and the stuff related to it. My name is Dave. I have all of the social handles at Dave Trades Stock. So check us out on all your favorite platforms. There may or may not be content on there yet, but it's going to be coming if there isn't. And so Dave Trades Stock, notice no S, stock. So Dave Trades Stock is the handle on your favorite media platforms, social media platforms. And my name is Dave. It's been a pleasure. I look forward to getting to know you better. Leave a comment. Please subscribe. And let's grow our accounts together. Talk soon. Bye-bye.